I'm John Micklethwait, the editor-in-chief at Bloomberg, and I'm delighted to say we've got Larry Fink, the CEO of BlackRock, with us, the world's largest asset manager with $8.7 trillion under management, two-thirds of it in passive index products. He's also famously the author of an annual letter to CEOs, which has become a kind of standard bearer for corporate social responsibility, especially on the issue of sustainability. And so, Larry, we might start with that. And in that, I can get a quote from it. You said, "I believe that the pandemic has presented such an existential crisis, such a stark reminder of our fragility, that it has driven us to confront the global threat of climate change more forcefully and to consider how, like the pandemic, it will alter our lives. And you demand a global and ambitious response. Last year, you targeted thermal coal. This year, you're asking all companies to disclose concrete plans to move towards a net zero economy by 2050. And the point about this is you're going to say you're going to hold them responsible. If they don't do this, you may vote against the board of directors with your passive funds, and with your active funds, you may disinvest." And I suppose the main question for you, the letter came out yesterday, is what has been the response from the CEOs so far?
We'll really know the response coming into the next AGM. I think so far the response has been very positive. I've received many texts and emails. Thank you for moving forward. But you know, the real response will be how will companies adapt to the ask. And I'm doing this with not because I'm doing this not as an environmentalist. I'm doing this as a capitalist who truly believes that climate change is investment risk. And as a fiduciary to all our savers, and we manage more retirement assets than anybody in the world, and the responsibility of managing that asset, it's a long-term outcome. It's not a short tick-tock of the day outcome, but it's a long outcome. And we see how climate change is going to impact all of society, as my letter suggested, similar to how COVID has done that. But this is not obviously a one-day event. It's a 30, 40-year event. And this is slowly occurring. But we're seeing evidence every year now of more and more climate change. And we can debate all day long whether are humans responsible for it or not. Obviously, from my perspective, science does prove that out, that our activities are elevating the temperatures that's causing this great problem. And so we believe it's going to take tens of trillions of dollars to mitigate the carbon impact on our economies. It's going to be highly opportunistic in creating new jobs. But at the same time, many companies are ill prepared for this, and they're not moving forward. And the letter is asking for companies to review a long-term strategy, which I've asked for many years now in my letters. But a part of that long-term strategy is please tell us how you're moving to a net zero carbon environment and a footprint. Now, 127 countries have already done this, and we're seeing record amounts of flow of capital moving into sustainable products. $366 billion moved into it last year alone. So
do you think that regulators should be doing this? I mean, people like Mark Carney have come forward and said, look, regulators should demand this. It shouldn't just be people like BlackRock. It should be regulators should say companies should be forced to disclose this as part of their general actions.
Mark and I talk about this all the time. I prefer capitalists self-regulate and move towards that movement. And quite frankly, John, I would say Mark is pretty happy with how fast it's moving. Maybe in his mind, we're not moving fast enough. Last year, I asked companies to report under TCFD and SASB. We saw a 366% increase in companies now reporting under SASB. And so this is accelerating. I'm excited about it. I'm a major believer that capitalism understands this, and we're moving forward. And we're moving forward because it's good for business.
What do you say to, I mean, from the green side of things, people like the Sierra Club, the Sunrise Group, people like that say, we want you to go even faster. What do you say to people like that from that side of the debate?
I think the tension from the I would say the green activists have been positive. On the same time, I don't think any politician can abruptly change the dynamism of jobs, especially in COVID. We've lost tens of millions of jobs worldwide. The number one responsibility of governments right now is to create jobs, and I do believe climate change will, and the outcome of moving more towards a net zero environment will create many jobs, but the jobs will be created maybe at different locations. The timing of the creation of the job from the destruction of jobs is not perfect, and I think all of us have to have a just carbon transition. And I understand how the environmentalists are saying if we don't do it now, we're going to have bigger problems, so we must do it now. I just don't know how that works out in a world today where we're seeing rising populism politically worldwide, and much of that populism has been created because of people's fear of their future. They're fearful of these issues. This is why segments of society, in my mind, are fearful of this whole conversation of climate change, because there's millions of jobs that are connected to hydrocarbon industries and other industries associated. And so let's be clear, we're moving fast. Think about how faster now we're moving to EV and how quickly we're going to move to EV vans and other types of vehicles. We're moving quickly. I think technology has to move even faster. Bill Gates talks about this quite extraordinarily well, about if we are going to get to a net carbon world, it is only going to be done on the back of great technology and technology advancements. And that's why we need to be investing in these new technologies, and it's going to be through the finance of new technologies is the only realistic way of us moving forward to a net carbon world, zero world.
But that issue, just to push you once again on that issue about the government, you talk about a just carbon transition. I mean, at the moment, that's slightly being left to the market. It's being left to capitalists like you, as you point out, philanthropists like Bill Gates. People are pushing in particular angles. But in a strange way, this is something surely where government, where society as a whole, should be trying to make decisions about this. It shouldn't be business who's necessarily making these by themselves. I mean, there was an interesting survey by Edelman that just came out showing that people trust companies more than politicians. I mean, in some ways that might reassure you, but doesn't it in other ways make you feel rather sad?
Well, I know I'm actually quite pleased that I'm in a group of business leaders that are doing the right thing. And I think that's what the Edelman survey is indicating, that it is being recognized. Let's be clear, though.
But without governments doing anything, without China and America or India doing things, but nothing's going to happen. It's what you're doing makes a difference, certainly. But in the end, it's about the state.
You're right, John. What I was going to say is we need government's involvement, because what I can do is help move along public companies. If we are really going to be moving to a net zero carbon environment, all of society has to move, not just public companies. And public companies only represent a small component of the economy. Actually, governments, state and local governments, are going to have to move forward in what they do. I mean, government represents a large component of society and society's jobs. So governments are going to have to move forward. I'm indicating in my letter this year, it's not just governments, but also I'm asking, large private companies to move forward in this too. So this is something that we all have to do, and we have to do it in conjunction. And the only way we're going to be able to finance this, to finance the impact of climate change on cities and in countrysides, on the physical impact of climate change, is going to have to be done through a public-private type of investment scheme. And there's huge sums of private capital looking to invest in these type of opportunities. We need to have a large infrastructure program to prepare ourselves for this transition. And then when just like the internet, how it's changed our daily personal lives and professional lives, I believe governments worldwide are going to need to invest in the R&D of how to prepare for climate change and helping us design and build new technologies. And, from battery storage and the efficiencies of batteries, if we had strong, efficient, cheaply made batteries, we'd be able to transform our power grids so much more rapidly. And so there are many things we need to do. And then we need to find ways to better sequester carbon and many more things like that, and planting more trees. And this is all going to be a part of a long-term process. But it can be done with government and with business.
I'll come on to BlackRock's sustainable assets in just a second, but can I just ask you on that, on Joe Biden, have you seen a change already in terms of the Biden administration, in terms of the agenda that you're pushing, this issue of sustainability? Is that tangible already?
It will be tangible, hopefully, in the next few weeks when we learn more about what the president is going to be doing with his administration. There are many, many conversations going on with Secretary Kerry. He has convened already a number of meetings, what he's looking to do with a bunch of business leaders. And I think we are going to see real evidence that the Biden administration is going to be taking climate change seriously. He already signed an executive order to reinstate the U.S. in the Paris Accord. So I think over the coming weeks and the coming months and years, we are going to see an administration that is going to move forward on the issues of climate change. And it really his job now is to try to bring society with him.
How big, I mean, you are also involved in China. Climate change is a classic example where without America and China working together, it's very, very hard to fix, as indeed probably the same with COVID. The kind of new set of tensions between China, how do you see that relationship going at the moment? And particularly, given your particular interest, what do you think of the delisting of sort of Chinese companies in America?
Obviously, it was a big effort for us to sell those assets out. I talk about in stakeholder capitalism, our job is to be responsible in every community we work in. In the United States, we were asked by our government to remove those investments in U.S.-based products, and we've done that. At the same time, John, we're seeing record inflows from our global investors into China. And there was an article about China was the #1 destination of new capital. We're seeing that worldwide. And as a second largest economy that's slowly opening up, we see evidence all throughout the world of capital coming into China. And China's central bank and its financial leadership are trying to find ways of raising the standards in China. I've had many conversations with the Chinese leaders to ensure that as more capital comes into China, that China is doing everything they can to making sure their listing standards, their financial statement standards are equivalent and as good as anywhere else in the world. And that's all happening at the same time. China has a remarkable problem similar to many other countries, even the United States. They have a huge retirement crisis in China as their population is aging. In my conversation with the Chinese leadership, much of it has to do with either green finance or retirement. And they need to create a third pillar for retirement. There has been no foundational retirement system there. As a result of that, the Chinese have the highest savings rates of any place in the world. So China, for it to continue to grow and grow domestically, it has to unlock some of that savings. That savings is sitting in a bank account chiefly. It doesn't have the same multiplier effect of moving through the economy. And so one of the most important things for China to do going forward is to is to copy the West in building a third pillar retirement market. And that is long-term savings. That's the retirement savings. That's what 2/3 of BlackRock's assets is in the form of retirement. And that's what China is looking to do too. So we will do whatever our government asks us to do here in the United States as a US-based enterprise. But at the same time, we're the second largest asset manager in terms of retirement in the UK. In Japan, we are the largest. We're seeing capital worldwide coming into China. And that's something maybe missed here in the United States. It is a huge destination of new capital. The Chinese entrepreneurs are creating new technologies there too. I'm not here to say China does not have a huge debt cliff in supporting its economy, not unlike the debt cliff that the United States has with our growing deficits. I'm not saying we should do anything about the deficits until we get our footing back after post-COVID, but we will have many conversations in the coming years, John, about how do the U.S. navigate its $30+ trillion deficit.
Do you think that's the biggest? I'm going to come back to China in a second. Do you think that American deficit is the biggest worry that investors aren't thinking about yet?
Well, it's a worry we don't have to worry about yet. I think the biggest worry right now is the pandemic. That's what I have told every government from the Biden administration across the world. As soon as we can get herd immunity from the pandemic, that will be the ability to, once again, broaden the economies. I mean, what's amazing about 2020, even going in now 2021, was how successful many components of society operated working remotely. And so at the same time, a large segment of the economy of aggregation of human beings, have been basically stopped, from cultural events and sporting events and hospitality and travel. And so we are not going to broaden the economy until we have a safe economy. And I'm talking about a safe economy, an economy that we don't have to worry about our health.
Very quickly, going back to China, I mean, you set out, I think very eloquently, the case for kind of logical economics, that there is the Chinese need to create savings and invest them. America needs products, that there is a world out there where the two combine. But and I know as well that economic logic and nationalism and emotion don't necessarily go together. And on most accounts, you're in America at the moment, there is vibrance of nationalism both in America and China. And competitiveness. How much do you worry about that? You didn't, when I asked you that before, you talked about the logical reason why it shouldn't be there, but you're also a practical investor. How big a worry is that for the year ahead?
I believe in multilateralism. I remain to be a globalist who now needs to focus more on making sure we have secure and great jobs in everywhere we are. So I think that's where we focus more on globalization, less on the impact in parts of our economies. And so there is a reason for the Europeans and Americans to be tough on China, but we need to be tough and making sure it's a level playing field across the board. And I'm all in favor of having hard conversations. At the same time, if we truly want to have a dynamic world economy, it has to be done through having the second and largest economies in the world to be working together. If we're going to solve climate change, getting back to that, the first and second largest economy are going to have a conversation. We're going to have a dialogue and multilateralism. There are, despite the tensions, the trade deficit between the United States and China actually grew in 2020. And so we are, as you suggested and framed the question, we are still actively buying many, many Chinese products. And the products may be manufactured in China, but it is a U.S. labeled entity or a company that has its name on it. And so I know this is a very tense moment between the two countries, but the reality has been we have been doing more business, the United States, with China in 2020 than we did in 2019. And I know the rhetoric and I know the dialogue, but the realities are we are codependent on each other. And at the same time, President Biden loudly said, we have a new policy of buying American, and which is fine. But that changes also the whole world toward, the whole economic foundation of a consumerism. You asked me what I worry about. I worry about through these deficits. I worry about moving away from consumerism, which was the economic policies of the United States post-World War II. And President Trump, through his directives and through his trading practices and creating large tariffs, we are raising the prices of our goods. If we move more and more goods to the United States and create more dynamic jobs, we are going to see an elevated increase in inflation. And so if you look at the U.S. bond market and you look at the forward curve of the 10-year, we are now estimating that inflation is growing, and that's going to be a bigger issue going forward. The question is that inflation good inflation because it's creating more jobs in the United States? Those are going to be some of the questions that we're all going to be debating probably in 12 months, 18 months. And we're going to see how this how works out in a post-COVID world.
Very quickly on that, I saw the BlackRock Investment Institute came out with that on inflation as well. You personally, when do you expect that? When do you expect that kind of inflation to come back? And do you think it will be the good sort or the bad sort?
It's not coming back until we are behind. We have herd immunity, and we have a broadening of the economy again, and we have all components of the economy lifting up again. At that period of time, whether that is the fourth quarter of this year or sometime in 22, plus if we start moving manufacturing to the United States and those cost of goods are more expensive than what they would have been elsewhere, you could argue it's going to be a component of a very good inflation because it's creating jobs. At the same time, it may create bad inflation in some parts. But the last thing, I think all governmental policies worldwide are focusing on in this COVID world, job creation, creating great jobs that have wages that you could live in dignity. This is the biggest priority in every country today. I don't hear or see any priorities related to the navigation of inflation. And I'm sure we will have rising inflation in the future. And I would hope if we are able to create those jobs, that inflation would be considered good inflation. But let's be clear, if we start seeing inflation creeping up above 3%, 3.5%, we are going to be entering a period of time where that inflation may be considered to be difficult, and the Federal Reserve would have to clearly change their course of interest rate policy.
You also mentioned government debt. There's a good quote, I think, in a Hemingway book where somebody is asked how he went bankrupt, and he says, well, two ways. The first was gradually and then very swiftly. If you look at several countries around the world, Italy might spring to mind, they have a lot of debt by any normal standards, and they're taking on more. At the moment, the markets are very clement to that. Do you expect that to continue, or in the back of your brain, is there the worry that at some point economics comes back into that?
Once again, with Italy and in Japan, they have similar situations with debt to GDP, 250-ish. The positive side of both Italy and Japan is most of their debt is financed domestically because there are large savings rates. And that is one of the reasons why there's less fear about Italian debt as long as the savings rates remain high. But in both societies, aging is happening. And so over the course of the next 20 years, you're going to see this aging society starting to spend their savings. That's when the Italian or the Japanese deficits are going to start really having an impact. In the United States, as long as the U.S. dollar is a store of wealth, the exportation of our deficit is not a problem. If there was another store of wealth, if there were multiple stores of wealth, let's say that, and then the exportation of the dollar and the deficits will become a problem. And that's a problem that we're going to have to live with when that time happens.
I'll ask you one thing on stores of wealth. A couple of questions from the audience have come in about, inevitably perhaps, Bitcoin. Are you enthusiastic about its prospects?
Bitcoin is still a very small market, and it can move in very large increments with small movements of money. And so it's not a market for the calm. I understand the enthusiasm around it. The one thing I can say, John, by just referencing how often Bloomberg and other media sources talk about it, it must have caught in the fascination of many people because this asset category is so small relative to other asset categories, and the preponderance that is being discussed on Bloomberg and other sources of media tells you that, people are fascinated about it. And so I would look back to, I'm fascinated myself by how much it's on media, business media. So I would say business media believes it's going to have a huge future, but let's bring it down to the investor side. Everyone is focusing on it. It could be another store of wealth, but right now it's still untested. It has huge volatility, moving in 5% and 6% increments with small dollars investments moving it. And so for anything like that to be truly successful, it's going to have a broadening of the market, and you could invest large sums of money without moving the value to the extent it's doing it. So we're watching it. We're enjoying the conversation. As I said, we're fascinated by how many people have enjoyed the conversation, but it has not been proven yet on the long-term viability of it. It is my instinct it may some form of a digitized currency is going to play a bigger role in the future, and it may be a Bitcoin or maybe something else that has developed. But there is a fascination, and that fascination is really fun to watch.
Sometimes the media is interesting by itself. Larry, I'm going to ask you one last question, which goes back to the subject we started with. On the issue of sustainability, I looked. You have gone up, I think, to 200 billion of sustainable investing of part of your portfolio. You're talking about reaching $1 trillion. I saw last year, I think you added 60 billion. Is that, I think the target is for the end of this decade. Is that, how do you view that target? Do you view that as one which is easy to reach, or what are going to be the motors that are going to get you there?
Well, how we're going to get there is through the technology advancements, through the advancements of more opportunities, through public and private investments of infrastructure to prepare for that. I believe if we have society throughout the world focusing on this, and we're building new technologies, building new infrastructure around this broad issue, 1 trillion will be a low bar for BlackRock. If there is a reluctance to build infrastructure for preparation, if there is not an advancements in technology, then even $1 trillion could be hard to attain. But at the path that technology is moving, at the path of how many governments are focusing on this, I believe we are going to see new technologies. We're going to have governments who are going to be more prepared. And through that, I think we will see $1 trillion will be a low bar.
Well, we're back in the world of governments and businesses and politics again. Larry Fink of BlackRock, thank you very much for giving us your guide to the year ahead. Thank you.
Thanks, John.